What is up, YouTube, and welcome back to another Fridge Financials video. In today's video, we are back with another crazy bets in the stock market, courtesy of Wall Street Bets. So, if you are excited for today's video, make sure you like the video, subscribe to the channel, and as always, turn on those bell notifications for all future uploads. Now, this video I am actually recording Thursday afternoon. Usually I record them on Fridays, but we are looking at Thursday right now. And the reason why is because some craziness is happening in the market, and I wanted to get this video out because Wall Street Bets was showing some crazy stuff. Not crazy stuff right now. It'll probably come out more later tonight and tomorrow with how the market reacted. We're going to talk about it a little bit, show some, still some educational, awareness and financial education around trading stocks and everything else here. So we're still going to make it educational for you guys. But I do apologize if it's shorter than what you are looking for. But without further ado, on today's market, this market is crazy. And if you take a look just to understand how this market reacts here is SPY having this beautiful, over 1% rally into the pre-market this morning based off of NVIDIA earnings. NVIDIA beats on earnings, NVIDIA goes up, and NVIDIA is owned in about, 8% for SPY or maybe 7% in SPY. So the markets usually go up overall because NVIDIA's got such a huge weight to it. But then this just unfolded. We had a swing from about 1.5% on the high down to about 1.5% on the low. So about a 3% market move. And as you could tell by this kind of chart here, some people made some very good money and some people did not. Now, my first initial understanding to this before we get into some crazy trades from Wall Street that were mostly today and a little bit over the week earlier, we've had such a bad time the last couple, days in the markets here. As you can see, SPY's pulled back quite a bit. And the reason why this kind of happened partially is, because we had jobs data come out this morning at about 8:30, and it was a huge beat on the jobs data. And people are like, well, Fridge, why would that be bad? Well, I think the market now is really trying to price out a rate cut in December. We were talking about how the labor market's cooling down. We were talking about how, inflation's going up here, but the labor market's slowing down so much. We got to, maybe hopefully cut rates and start cutting rates so that way we can borrow cheaper and we can hike up jobs and stuff like that, and employments and everything. And so this little bit of more of a rally here has been more or less people pricing in these potential rate cuts here. Now, with jobs data coming in way higher in terms of payrolls compared to what was expected, that makes people start to think, do we need rate cuts, or is the market going to turn back around in terms of the labor market and people getting jobs and everything else? And that is partially what my belief is as to why this is happening here. People read into it probably a little bit more. Some other news probably came out as well, but then we just got absolutely slaughtered in the markets here. And what we're going to do is we're going to take a look at some trades here that people made and bring some financial education to them. So this first person here said, losses. I decided to get back in the market 3 months ago. So he got back in around August, it seems like, saying 3 months ago. And he's down about 9% in the last 3 months. And dude, same here. We've had a rough roller coaster in terms of the last 3 months since August. If we take a look back, on the daily here, here is where, actually, no, I mean, August was, right around here. Honestly, you would still be up if you were just investing probably in the markets, but probably day trading or, maybe options trading maybe, or individual stock trading or whatever the case may be. But getting in the market 2 months ago and being down about, $10,000 is obviously not a good feat. But again, things to keep in mind about, we go through these periods of high periods, low periods, euphoria, panic, sadness. We feel it all here in the stock market. It's not just straight up euphoria the entire time. Unfortunately, we do have these times where we have corrections, pullbacks, you name it, is there. So he could have gotten at the bad time, for if it was an individual stock, if it was options, whatever the case is, he could have just gotten at a not a good time. So, it sucks. It really does. And I feel for you, man, honestly, because my portfolio, my individual one, has not been doing too hot either. This next person said, oh, wow, the market is looking really strong pre-market and at open. I'll buy some calls before work and check back end of day. Gah. Down 92% overall. Basically, it was a very, very small portfolio, looks like. So he kind of just blew the entire account here. And the idea that you're thinking of here of saying like, hey, like I'm going to buy calls, this market is rallying into the open here. With that rally being 1.6%, honestly, I wouldn't have bet it to go much higher. I would have maybe guessed it to be stagnant, maybe come back down to about 0.5%, maybe not this crazy rug pull that happened here. But I will say that when you're taking a look at this overall, when you have this pre-market move at really high, about 1.5%, 1.6 at one point, I think it was, you're not really going to go much more. Okay, there's only so much really, unless you get some really big catalyst to push it higher, you don't get that. And honestly, if the labor market data came in like crap and it was bad, then the market would try to price in those rate cuts again. It's been starting to kind of unprice because of the government shutdown, no data coming out, putting the Fed in a tough spot, all those kind of things there. So personally, I wouldn't be trying to buy calls at open if the markets are already having a huge rally here, like a huge rally. If it was up like 0.3, 0.4%, I get it, totally understand. But being up 1.6% pre-market, you really probably won't get much more of a move for the day. So something to keep in mind about in this case. And again, check back end of day. I probably would have said maybe set a stop loss maybe, so that way you don't blow your entire portfolio. But we live and we learn. And you know what? What I will say, shout out to you for only trading $1,800. That's a lot of people are doing this with tens of thousands, and you did it with about $1,800. Okay, so could have been a lot worse. Could be a good learning experience, obviously, for all of us, as we know here. But it does really suck that all my accounts were down today. I think a lot of people's accounts were down today because we got absolutely the rug pulled out from underneath us. Crazy times. All right. The person said, I was just trying to scout for a quick gain and got distracted. And that's exactly what happened here. Down $36,000 here. This is a prime example as to how quick a market can flip. Like, I have not seen a market flip this badly in a long time. If you take a look at, even, the hourly maybe, look at the hourly. It's just, rallies up in the pre-market, great earnings, and then pulled right back down from underneath. I've never seen that. I haven't seen that much of a move in a very, very long time in these markets here, right? And so that's something that's really important to keep in mind about, is that when you get into these kind of trades where it's only a 5-day expiration date period here, you gotta be ready to either set your stop losses, you gotta be mindful in watching it, especially putting in tens of thousands of dollars here. So this is very, very unfortunate, but it is a good experience to say, hey, this is how fast the market can come out from underneath you in either direction. If you're bearish in the market, we can get one catalyst that flips it bullish, and vice versa, as you will see here. So unfortunately, that does suck for this person here. So hopefully you're able to rebound in due time. This next person said, do not fall in love with a stock. And honestly, this is advice that is overlooked quite a bit here. This person right here is down 55,000 year to date. And as you can see, most of it is in MSTR, or MicroStrategy, and a little bit of BMNR as well. So basically betting on cryptos and Bitcoin specifically. And as you might have guessed, Bitcoin has not been doing too well. Take a look at the Bitcoin chart here. You can see Bitcoin has gotten absolutely slaughtered since $126,000 as the high. Now you're down about 50. Honestly, it's about 50%, I think, right? Let me take a look. About 30%. I can't do math right now. I'm exhausted. About 30%. It's about 30% in the matter of the last, 2 months, month and a half, maybe. So this person, again, going, falling in love with those crypto companies and stuff like that, which, obviously made probably some good money previously because Bitcoin's so high, but now is feeling the pain right now. You see these big losses here, which really, really sucks. And as a result, again, you will see down a lot of money. And honestly, this is very good advice. When you fall in love with a stock and you think it's going to rebound, you're like, it's going to come back. It's going to come back. That's how you get more of those losses realized, instead of just cutting the cord, cutting it off, and saying, you know what, it's not going to work. I'm going to wait a little bit and try to reevaluate it and go from there. Do not feel like you need to hold the stock because you fall in love with it. And if you make money on the stock, do not feel like you need to hold it because you've made money on it. Sell it, make some money, wait for a pullback. This is actually very good advice to not fall in love with the stock, especially ones that might have some more volatility, like Bitcoin ones, for example, or those big tech companies, those AI plays potentially, because those have some big fluctuations as a result. Is that person says diversification, don't make me laugh. And he's also in BMNR, and he's down $52,000, 100% invested into BMNR, was 185,000, now down to 132. One good thing I will say, shout out to you for getting shares and not for options in this case, because that obviously does not really plan out as well. And you can sell some cover calls, to offset your gain or your losses potentially if the stock moves down, for example. But yeah, if you definitely got into these kind of companies where they're Bitcoin plays and everything else, and Bitcoin has been getting absolutely slaughtered in price recently, down again 30%. Ethereum, same thing, down a lot. You might end up holding the bag for some time. But again, if you have the conviction, if you're bullish on Bitcoin long term, then why not? But again, use this time, sell some cover calls, make some passive income. Will definitely make your life a little bit easier. Next person says, and this is just to bring some educational awareness here. Breaking news, Netflix loses more than $400 billion in their valuation, down 90%. And this was obviously like a meme post. He obviously knows how it works. Netflix underwent a stock split recently. I believe it was 10-1. And now what you're going to see, and again, what people might be posting, and this is why you have to make sure you do your own research here, is that it says, oh my God, Netflix is down 90% today, but it's stock split, so it was a 10-1 split. So each share that was worth $1,000 divides by 10, gives you each share being about $100 as a result of it. Okay, that does not mean that it loses market cap. It does not lose its valuation. It just creates more shares. So if you had one share at, say, $1,000, you would now have 10 shares at $100. Same amount of value goes into it. You still have $1,000 worth of equity in your position, but now you have 10 shares instead of one. So you don't lose money from a stock split. It just gives more shares available for people to invest into the company. Usually stock splits are very bullish on a company long term. Like this is Netflix, I believe, going under their second stock split, I wanted to say, at least that I know of. NVIDIA went under one. I know Chipotle went under one, but they haven't been doing too well, so ignore that part a little bit more. Apple went under one quite some time ago, and now it's back to $300. At one point, it was like $700, $800, I think, or maybe $600, and then it got split, and then it's got now back to $300. So the splits don't impact market cap. They don't impact your equity position. They just make it more hopefully affordable. But again, you can either buy one share at $100, or you can buy 0.1 share at $1,000. It's the same thing no matter what. So just keep that in mind. You see anybody posting about that. That is not accurate at all. I know this person was joking, but I think it's a good learning point because a lot of people don't understand that how stock splits work. And oh my God, are you gonna lose money? You don't lose money. Reverse splits do the same thing, but reverse splits are more bearish than more bullish. Regular splits are bullish, reverse splits are bearish, which you do not want. This person said, why couldn't I have waited 2 more months to start investing? Down 53% in the last year. Now, the thing to keep in mind about this idea, and this is how I always look at things like this, is that obviously you can never tell, right? You can never tell when you should have started investing. And everyone always says time in the market beats timing the market, right? You could have got in, a little while ago, and you could have made 5, 10, 15% maybe. But in this case, you obviously were on the other end of it. And that is just the reality of investing into stocks. And that's why, you want to be in it for the long term, not the short term. Short term, it's very hard to keep track of things. Long term, you usually tend to be better overall and profitable overall because of how long you're holding the money in the markets for. But, you never know what could happen with the market here. We've had, again, a pretty big pullback recently in the last, week and a half, 2 weeks or so. So that could be why this person maybe is having a down day or a down week, down months in the portfolio. So again, stay invested in the market though. Time in the market beats timing the market. So keep that in mind. And don't say I should have waited. Okay. The best time to invest is today. The second best time to invest is tomorrow. That's a very, very common phrase I think I've heard from people a lot of times. This person says, I bit too much and went 0 DTE. He lost $16,000 on iBit, which is more Bitcoin, and he did go into 0 DTE options to make some money back. Now, things to keep in mind about in terms of this idea is that you have to be mindful that that's risky to chase a loss with a 0 DTE option. And he did about break even, which I don't show all the screenshots. He did about break even on it, which is good to hear. But if you're chasing your realized losses with zero DTE options, that could, in theory, make you lose more valuation and lose more money here. So don't try to chase losses as much, because chasing losses can be very, very dangerous, because if you chase a loss and you get a bigger loss, then you're now down a lot more than what you thought. And you get really mad and you start to, revenge trade, and that's kind of not a good thing as well. So shout out to him for making that money back. I love that. Basically about broke even here, maybe down like $1,000 or so. But again, please be mindful. It does not always work out this way. Next person, QQQ puts, zero DTE gain, went from 10 cents to $3.88. And again, when you get this kind of crazy market move, okay, like in the Qs, okay, when you get a crazy move like this in the NASDAQ, that's where you're printing that money, because this is a huge move. Let's take a look here. Where was the high? Let's get the nice little trend line here. Yeah, you're looking at about almost a 5% move on QQQ in literally intraday trading here, about a 5% move, a little over 4.5% here. And that's where these kind of trades print a lot of money here. He got at 10 cents. He then got in at 8 cents and then $3.67 per, contract. Made a lot of money here, made about $9,000. But again, it's zero DTE options. These could have expired worthless, but he got that very fortunate move to the opposite direction, which made him print some really good money. But again, keep in mind, you never know what will happen with these trades. Okay, that kind of move is not common here. Also, it could have moved even higher. You would have lost some money anyways. So zero DTE, again, I always try to say, be mindful of what people post on about those, because they are very, very risky. This person right here actually got very, very nice, it looks like here. So he had YOLO 1-day expiration 200 QQQ calls. So this dude bought QQQ calls for 11 that expired literally today at 6:10. He bought in at 67 and he closed them at 74. My guess and my understanding, he did. He definitely closed these as soon as market opened. So as soon as market opened, boom, he closed them out. Could you imagine the loss he would have ensued if he held these while the market reversed its course? This could have been a bloodbath as a result of this. So thankfully he was smart. He took his 11% profit, made $7,000. He put in 67,000. He easily could have lost a lot of money. So thankfully didn't. Good way to, manage your position, manage your trades there. Make sure that you know that when you're up, do not be like, I need more, because this could have been a huge disaster. All right. And that is it for today's video here. So a crazy day in the market overall, one that I've not seen in a very, very long time here. So hopefully you didn't get too, destroyed in your portfolios, or hopefully this gave you some good buying opportunities. Could have been that as well. Thank you guys so much for watching today's video. If you made this far in the video, make sure you like the video, subscribe to the channel, and as always, turn on the bell notifications for all future uploads. As always, I hope you're making money in the market in some way, shape, or form. And as always, I will see you guys in the next video.